Hey folks, this is Eric. I'm doing your stock market homework in 60 seconds or less than 5 minutes. One or the other. Today is April 18th, 2023, and it is tax day. So I hope you got your taxes done, got them in. You get all those maximum deductions so you can keep all the money in your pocket. This is Investing 101. 101. And the first thing that we're going to talk about is you want to trade, right? You want to trade. You want to trade what, though? Trading is just moving from one to another. Buyers to sellers, sellers to buyers. If you only have one, then you probably have low liquidity and you probably have a portfolio that's not doing very well. Nevertheless, the first option that we'll talk about are equities. So equities are having an equitable position in a company. So you can have this through common stock or preferred stock. Common stock will give you voting power. It'll also give you dividends, possibly, depending on the company. Preferred stock will give you higher yield dividends, higher interest rates, but you don't have any voting power. Think about one of the drawbacks that they say about preferred stock is that if the interest rate goes up, like for the Federal Reserve, then people move out of preferred stocks into bonds and that kind of thing. And when they move out, the price drops because there's more of a supply of the shares. There's less demand, supply and demand. All right. So JP Morgan, Bank of America, Wells Fargo, Morgan Stanley, those are some of the banks that do offer preferred stock. You can just go to your broker. You can put in a bond screener. I did it this afternoon. I did it with TD Ameritrade. Put in. No, I didn't do it with TD Ameritrade. Not for bonds. Not. That's not what I. Nope. You can do a stock screener. Put in for preferred stocks. Okay, but moving on to bonds, not the James Bond, the stock bonds. Okay. All right. So these are just units of corporate debt that's issued by the company, and it's tradable, right? So you kind of get a piece of paper, like you can say that on such and such date, so many times at such and such interest rate, you'll get a coupon, you'll get a payment, right? So that's pretty much all it is. It's like when you borrow money from the bank, now they can borrow money from you, or you can loan money to the government. Those are like treasury bonds. And one of the things that people are talking about a lot these days are the I bonds. So those are Series I bonds issued by the United States Treasury that has two components of the interest rate, the return, which is a fixed rate, and it also has a variable rate, which is supposed to kind of help hedge inflation. So we know that inflation is high. It's very high. It's sky high. And yeah, can't even afford eggs these days. But nevertheless, all right, so you can see that with the bonds, they tend to be considered a little bit more safer because there is at least some type of entity that measures the risk. So you have as well as AAA, and you have as low as D, which is, you see D is junk, right? Yeah, D is junk. Just like in school, if you're getting D's, that's junk grades. All right, derivatives. Derivatives are they pretty much they are an asset. They're a security that derives its numbers, its risk pricing and everything like that from an underlying asset. So you got a couple different options here. Options are it's a contract that you can purchase, call or put, different strategies, but essentially you have the option to buy or sell a contract in the future at that specified date. If you don't want to buy it, you don't have to buy it. You just lose the initial money that you paid for the contract. Futures, on the other hand, you're pretty much agreeing to purchase, sell, whatever it is, the underlying asset at that future date. And if you, so you can lose a lot of money there. You can lose a lot of money with anything. Investments are risky. I am not a financial preparer or a financial consultant. Okay, and then swaps. So options and futures, apparently they happen on the publicly traded exchanges. Swaps happen on over-the-counter exchanges privately, right? So what happens in the dark, what happens in the dark. All right, so guys, what time? Under 5 minutes. I did it. I didn't do it in 60 seconds, but you gotta love I did it in under 5 minutes. Happy trading. I enjoyed doing this one. I'll see you next time.